The stock market bounced back last week after the prior week's sell-off. The S&P 500 gained 1.7%, the Nasdaq jumped 2.1%, and the Dow added 1.6%. Smaller stocks led the charge, with the Russell 2000 up 2.4%. All 11 sectors closed higher. While communication services was the top performer, the gains were not simply isolated to techie companies. Real estate was a close second as it added 3.4% last week. Real estate benefited from a drop in interest rates as treasuries fell by a few basis points across the durations. Additionally, the probability of a cut to the Fed funds rate for the next couple meetings spiked, with odds around 98% for the final 2 meetings of the year. Financials was the weakest sector last week, ending effectively flat. Market participants were concerned about the credit exposure that a number of regional banks had related to some bad loans. Investors appeared to sell positions in these banks, as well as in the overall regional markets, before the full details were known. In geopolitical news, U.S. Secretary Scott Bessent confirmed that talks will be taking place soon between the U.S. and China following the latest trade escalation. President Trump acknowledged the state of things when asked if the countries would be in a trade war, answering, "Well, you're in one now." This week, earnings season begins to ramp up with over 500 companies reporting. Market participants will sort through these releases in addition to the news around the government shutdown and overall geopolitical sentiment ahead of next week's FOMC meeting.